Welcome to the Business Standard Banking Show. Chokhani Securities was renamed as U GRO Capital after Sachindra Nath, the former CEO of Reliquor Enterprises, acquired the company in December 2017. U GRO, a systemically important NBFC, commenced in lending operations in January 2019. It witnessed a year-on-year growth of 125% in FY22 to reach an AUM of close to 3,000 crore as on March 31st, 2022. To speak about the regulations around the NBFC sector and its growth opportunity, we today have Mr. Sachindra Nath, Executive Chairman and Managing Director, U GRO Capital. Welcome to the show, Mr. Nath.
So Manojit, I think so if you look at our quarterly result presentation, I think so we are one of the unique companies which has put out its number, what we would do, not just for the current year, but all the way up to 2025. So our targeted asset under management by end of this year is slated to be 7,000 odd crore. As of September quarter ending, we should be around 4,300 odd crore, and hopefully we should reach that level of our business. And it is happening while you talked about the lower base, but I think so one of the things which we have to remember, this is a company which started in July of 2018 with a straight 1,000 crore of capital raise, which came from some very marquee global institutional investor. We started our business in April of 19, and our first year was post ILFS, wherein we do 850 crore of business. Then we were halted for 10 months. In FY21, we were at 1350 odd crore, but during that period, we have grown our infrastructure. So from a 200 people, we went to 1500 plus people, 8 location to 100 plus location. Our whole focus on data and technology has, taken leap-bound growth. And that's why from 1300 crore, we reached 3000 crore in FY22, and now at 4,400, 300 crore in half year of FY23. And hopefully we should be at 7,000 crore, what we have already disclosed to the public markets.
Right. But since interest rates are rising, do you think this could dampen demand for fresh loans?
So I think so the segment in which we operate, as we said that our whole premise is that data would transform the MSME credit in India. So it would reach to the level of consumer financing. We use our proprietary data tripod of banking, GST and bureau. Second, we operate the customer segment which are in the turnover band of 10 lakh rupees to 5 crore rupees. And all our 8 sectors and micro enterprises are consumption economy: healthcare, education, food processing, hospitality, light engineering. So our view is that the transmission of interest rate is not as high versus the credit demand and the need of credit for working capital and term loan. So we don't see that be a challenge. And also I think so the cost implication of the interest rate, a large portion of that is being borne by us, not by the end customer. So we are not seeing the fresh loan rates to go up. They are in the same band at what we were doing pre-rate hike and the post-rate hike.
But your cost of funds must have increased, because I mean, in September itself, we have raised NCDs at 10.5%. Are those cheaper than bank loans?
In the same band. As you know that we are technically a 3.5-year, 4-year-old company. And the liability side in India is divided in 2 parts. So you have, top 6, 7, 10 NBFCs, which are part of large corporate group, wherein their cost of borrowing is linked to the parentage, versus company like ours, which are standing on its own basis, our quality of capital, the governance and the management team. Our cost of capital would remain elevated in first 5 years, and it would gradually, basis portfolio performance, would come down, over a period of time. So in fact, we are seeing a gradual reduction in our cost of capital in a scenario where rates are going up. Is because of our vintage, and also because our initial cost of borrowing was much higher, and with the size coming, it is actually getting reduced.
Right, but I mean, is NCD is one of the should be preferred option going ahead, given the way bank loans are increasing?
So as you know that we look at our liability side. We say we are lending as a service. Our main source of liability is co-lending and co-origination. So, if you look at a numbers slide, it would say that 35% of our assets are off-balance sheet asset, which is coming from our co-origination and co-lending side. So our view is that the on-balance sheet liability is much harder than off-balance sheet liability. And that's why U GRO is the largest player when it comes to the terms of co-lending and co-origination. Of the 12 public sector banks, more than 6 are now partnered with us. private sector banks are there, large NBFCs are our co-lending partner. In terms of the term liability, again, we look at every source. So we have 60, 50 plus lenders on our balance sheet. We have now DFIs and impact fund, and public market and capital market is another source. So we look at diversity versus concentration, and every product has a different price band. So capital market listed NCD borrowing is while expensive, but we are establishing our brand and paying premium for that. Over a period of time, with rating upgrades and our vintage, that would also keep coming down. So we look at blended rate of capital versus byproduct rate of capital.
Do you have any capital raising plan in the near future?
Again, I would say so we have disclosed in our last quarterly presentation that given the rate of growth, this year we will raise capital.
Right. How much would that be?
So look, I think so if you do rough math, we have said that we will keep our leverage below 4 times.
Right.
And if we reach 7,000 crore of AUM and 35% of that is off balance sheet, so roughly around 4,500 crore would be on our balance sheet, right? And if you have to keep my leverage below 4 times, so the incremental capital need is between 300 to 400 odd crore, and that is our target to raise by third or fourth quarter of this year.
Coming to the asset quality issues, now many banks and other NBFCs are seeing stress in the accounts that were restructured during the COVID period, particularly from the MSME sector. What is the percentage of your restructured portfolio which is under stress, that is where repayment is due?
Yeah, so I think so. Look, I think so when the COVID hit and when we did the restructuring exercise, we were given that we were focused on sectors. So we were focused on healthcare, education, hospitality, light engineering, electrical equipment manufacturing, auto component, chemical, so on and so forth, and 100 subsector. We did a mortality exercise. For all of our 8 sector and 100 subsector, we did a mortality exercise. So for example, in hospitality, mortality rate for banquet hall was 100% versus fast food chain was 10%. And we allowed restructuring only for businesses wherein we felt that the post-COVID, the revenue pickup would happen. But otherwise, we felt that restructuring an account which otherwise cannot survive doesn't serve the purpose. It put pressure on our balance sheet and also actually killing the MSME itself. So that's why we curtailed the restructuring and we did not use it for all. Today, our total restructured portfolio is roughly around 3.5%. And almost 90% of that portfolio is current. So within the hospitality and very small restaurant business, which were unsecured, roughly around 10 odd crore of portfolio, which is under stress, and we think so would not come back, because once a small restaurant has shut down, it is very difficult for that to revive. Somebody else places that. Correct. I think the rest of our sectors have come back very strongly.
But generally, do you feel that rising rates are impacting the repayment capacity of the borrowers?
As I said, in the bottom of the middle to bottom of the pyramid, no. But because you remember this, if I have a 1 or 2 crore of turnover, right, as a small business, the 100 basis point rate increase, the tenacity and revolving credit is more important versus the cost of borrowing. As you move up to 50 to 100 to 200 crore turnover companies, obviously, working capital cost becomes a big deterrent, but not in our segment of the market, which is the M part of MSME.
Last year, I think you sold some loans to the asset reconstruction companies around 44 odd crore. This year, you have similar plans to sell loans to ARCs?
So no, I think so. The last year it was a unique situation. And now it is, I think, the outstanding is, so recoveries have happened roughly around 28 odd crore is the total outstanding around that. We had to do that because we are largely a retail business, or my MSME business. We had 1 or 2 cases which were part of our supply chain financing business, wherein one of the anchors who were linked to the supply chain went into insolvency. Now we don't have a skill set to deal with IBC and insolvency cases. And that's why we have to do it to ARC so that they can deal with that.
Coming to a recent development that happened last week on RBI barring Mahindra Financial from employing outsourced agents. Do you think with this move, since NBFCs depend heavily on outsourced agents for their recovery, do you think this move will impact the recovery of NBFCs?
So I think so you have to divide NBFCs in in two parts. NBFC, so there is an unserved market and there is an underserved market. UGRO is only in underserved market, not in the unserved market. So all our customers have existing credit lines, they are credit tested, and 99% of collection is through banking system, through eNACH and NACH systems, right? Which means versus the people who are in microfinance industry or in the industry wherein collection is physical in nature, this would impact. But we believe that in our case, all of our collection is in-house, and whatever we outsource is largely reminder systems. We don't have to go and collect physical check or cash from the customer. So the semi-formal to formal segment, it would not impact. Informal segment, it would definitely impact some bit, and it's also happening because of the revised norm on the NPA recognition. Now, because revised norm of NPA recognition, the buffer which of 30 to 45 days which used to be available for customer and NBFC is no longer there. So obviously there is a pressure on NBFCs to collect EMIs on the due date, and that's why there is a level of heavy collection machinery being utilized. So it would impact to some extent, not for us, but at least to some segment of the market.
Repossession of equipments, for example, that is typically done by agents, isn't it?
Yeah, so in our case, actually, most of secured loan are secured against physical collateral properties. So those are not done by agents. They are largely court process. And once you have arbitration and court process getting completed, then obviously they're.
So those are immovable properties.
Most of our 90% of our secured business is against immovable property, not movable properties.
But do you also hire outsourced recovery agents?
Not for that, because that's more legal process, right? So you have to go to court of law, you have to get a decree, and after that, there is an attachment, and through attachment, through legal recourse, you take the possession.
On that note, Mr. Sachindra Nath, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you so much, Manojit. Thanks for your time.
Thank you, sir. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.